able to create different algo bots, AI agents, machine learning. I've been doing this since about April of this year, and I've been streaming for about like these past 4 months, excuse me, 4 weeks. I wish it was months, 4 weeks. So we're just going to jump straight into it. If you do have any questions, my name is Kreative. Please feel free to ask. So I'm going to jump right into it. Can you explain, like I'm 12, what is the difference between IWM, QQQ, and SPY? I want to be able to build that reference there because we are building an IWM bot, right? So I want to know, okay, what is IWM? So if you do have any questions while I am working through this again, please don't be afraid to ask them. Of course you would do that. Can you explain, like I'm 12, what is the difference between IWM, SPY, and QQQ? All right, here we go. Let's try this again. Beautiful. Can you each is an ETF, and ETF is an exchange traded fund. So when you think of an ETF, I want you to think of it like it's a quilt, right? And each patch within the quilt represents a different company. So IWM, SPY, and QQQ is a team made up of different players, companies. SPY is the S&P 500. It is the biggest 500 and strongest companies. Strongest is strong word. Excuse me. It is the biggest 500 strongest companies in the U.S. It's like the NBA All-Star team. Only the best players get in. Example, Apple, Amazon, Google. So let's just go look at them real quick. Let's just put SPY Holdings. Remember? Holdings. And these are some of the top 10 holdings from SPY. We have NVIDIA, NVIDIA, Apple, Microsoft, Amazon. This is Google. This is Broadcom. This is YouTube. How ironic, right? Facebook, Tesla, and Berkshire Hathaway. Move slower because the companies are huge, very popular. Good to see how the whole market is doing. QQQ is the tech wizard team, tech companies. QQQ is mostly technology companies. Think of it like a team made up of super smart tech kids who are amazing at coding and gadgets. Example is Microsoft, NVIDIA, Meta, Netflix. Move faster than SPY, can go up big or down big because tech is volatile. Perfect for tracking hot tech stocks. Let's go look at QQQ holdings. Where are you? I just top 10, but all the holdings. So as you can see, there's going to be some overlay, right? So NVIDIA, Apple, Microsoft, Broadcom, Amazon. Remember, Google, this is YouTube, Tesla, Facebook, Netflix, Costco, Palantir, AMD, or Advanced Micro Devices, Crisco, T-Mobile, Micron, right? Let's just go into the middle of the list. This company makes 2K. So anybody plays 2K, Take-Two, Interactive Software, they make 2K. Zscaler, Diamond Energy, Coca-Cola, Exxon, paychecks. If you want to get paid, right, from your boss or from your company, paychecks, right? So on and so forth. So as you can see here, QQQ is a ETF that's full of the top 100 tech companies within the NASDAQ, right? So IWM is the little but wild team, small companies. IWM is made up of small companies, not huge ones. Think of like a team of fast, energetic middle school players that aren't famous yet, but they move crazy fast. Example, ton of small companies you haven't heard of. Moves fast, can go up huge or down huge, mostly risky, but more energetic. A quick reference sheet. So SPY is the big all-star team, QQQ is the tech wizards, and IWM is the wild kids, right? So huge companies, tech companies, and small companies, right? So SPYs, big companies, QQQ, tech companies, and IWM, small companies. Now, can you explain and advise which exchanges are these ETFs available? And then explain the underlying exchanges as well. So we're going to get a little bit of a preface. And once we have our preface, we're going to jump straight into our strategy. So which exchanges have these ETFs? All three ETFs, SPY, QQQ, and IWM, is in the United States, so on the same exchange. NYSE, or the American Stock Exchange Division, ARCA. This is the main ETF for the U.S. So SPY trades on the NYSE, QQQ trades on NASDAQ, and then IWM trades on NYSE. So Even though the ETFs themselves trade on the NYSE ARCA, these stocks inside them come from different exchanges. Here's a simple example. SPY holds the S&P 500. Those are 500 companies that could be traded on the NYSE or the NASDAQ. So SPY is a mixed bag of companies, both from major exchanges. QQQ is NASDAQ only. So this is why it's tech company. NASDAQ is the home of the most tech giants. And IWM, the 2000 small companies from the Russell 2000 index. This comes from the NYSE and NASDAQ. So NASDAQ equals tech school. NYSE, or the New York Stock Exchange, is a big traditional school. All-star team with players from both schools. QQQ is all-star teams, all coming from NASDAQ. And IWM is coming from both schools. All right, perfect. So we got it. We have the mix. All right. So I want to let's go look at SPY real quick, right? So this is the 1 minute chart. I'm looking at it from TradingView. And as you can see here, each of these candles, right, represents an activity or a moment in time capture and 1 minute between the buyers and the sellers. Now, if you see a red candle, that means that the bears or the sellers are in charge. If you see a green candle, that means the bulls or the buyers are in charge, right? So what's happening right now is we're seeing some oscillation or going back and forth. Never mind. The bears are completely in charge right now, just looking at these past two candles. But what I'm seeing is a bit of indecision. So this is a hammer, right? Most people, and this is a doji. The doji, and this is a bit of a hammer, a bit of a doji, but whatever. Let's just get into what. Excuse me, I'm not trying to cough in your ear. So what's happening right now is that we're seeing real time that the sellers were in control, the bears, but never mind. Every time I'm trying to make a point, it's like the opposite wants to happen. So as you can see here, we're seeing real time of what's happening, and this is showing us a bit of indecision, right? This doji, and this means is that there's a tug of war between the buyers and the sellers. The buyers aren't really winning, the sellers are really winning, right? The bulls nor the bears are really winning, and as you can see, it went really tight, doji, right? So let's go look at IWM. IWM is almost the same right now, just a little bit of a gap up, right? And that's kind of cool because that's what I want our strategy to be based off of, right? I want to create a strategy picking an indicator from TradingView in order to create a gap up strategy. So before I jump into that, can you explain what is a gap up and how it works for stock or option trading? Gap up or gap down? Gap up. So imagine a stock chart like a staircase. Every minute the price makes a new step, but sometimes the market opens in the morning. The next step is way higher than the step from yesterday. Then nothing happens. The big empty space between the yesterday's price and today's opening is called the gap up. It means that the stock jumped up instantly before anyone can trade in between. Example, yesterday's stock price was 100 and then this morning it's 105. There's no trades between the 100 and the 105, just a jump. That's a gap up. Excuse me. Why does a gap up happen? Because something important happened when the market was closed, like good earnings, positive news, a big upgrade, right? Good economic report. A company said something exciting. People got excited. They want to buy, and the price jumped at open. So how does a gap up work in trading? In stocks, if a stock gaps up, it opens the day higher than was yesterday's close. Momentum traders looking for a continuation keep going up. Mean reversion traders are looking for the gap to drop back down and fill the space. Options react way harder to gap ups. Here's what happens. A call benefit from a gap up. If you bought a call and the stock gaps up, the option value can spike instantly. Delta increases, implied volatility may jump, and gains can happen before you even get to open. It's like waking up with free profit. Puts can be hurt in gap up. Okay, I just want to explain. Okay, quickly explain the gap down. Now, thought you were going to do that. I just go over the gap down so we understand gap up and gap down is just the inverse. A gap down is when the stock opens lower than it did yesterday. It jumps down instantly without trading between. Yesterday's price closed at 100. This morning it opened at 95. No trade happened between the 100 and the 95. The price just teleported down. The empty space equals a gap down. Why does it happen? Usually because bad news happened overnight, like bad earnings, a company warning, negative news, market fear, a big economic report. Everybody wants to sell, so the price jumps lower at open. How it affects traders, stocks, price opens lower, could fall more, could bounce back to fill the gap. Option traders, gap down hits the opposite side of the gap up. Puts love gap down, calls get hurt. One sentence, gap up equals stock opens lower than it did yesterday, usually because of bad economic news. Good for puts, bad for calls. And gap up is just the inverse. It went up because of economic news or whatever it may be. It is bad for puts, good for calls. Beautiful. So what I want to do now is I think I'm going to build this strategy based off IWM. Remember, IWM is the Russell 2000. It is the top 2000 company within either the NASDAQ or the New York Stock Exchange. So what I want to do, remember, I just click indicators, right? And I'm on TradingView looking at the 1 minute chart. So what that means is that each one of these candles represents 1 minute of action, right? Between the buyers and the sellers, or between the bulls and the bears. And I do talk fast, and I'm trying to slow down. If you need me to slow down, you just let me know. So I'm just going to keep going. All right, Gucci. So what I'm going to do is just go ahead and hit gap fill. And then we have a few strategies that it's just gap fill strategy, right? Are we going to be that easy, that lucky? Market fair value, I don't like that. Pass HML. Can you see all this? If you can't, let me know and I will zoom. All right, I think you can. All right, beautiful. Gap filler, IU gap fill strategy. So let's try that. IU gap fill strategy. So what I'm going to do, you see these brackets right here? It's going to open up the source code. Then once we have the source code, it's going to populate on the bottom. And this is a Pine script. Pine script is a language that is germane or specific to TradingView. It allows individuals to be able to build these type of indicators, right? Such that the community could use them. So what I'm going to do is build a strategy based off this indicator. Now, if it works, great. If it doesn't, I'm just going to scrap it and come back to another one, right? So what I'm going to do is just copy the following indicator. All right. Do I just want to go to, all right, let me just go to, let's go ahead and go to cursor now instead of just waiting. So I'm going to do, let's go ahead and go to cursor. I want to open up a new folder. We're going to go to option baby. I tried one, never mind. Let me just, Gappy. All right. And again, I'm not using cursor as AI, so I'm going to close that window. I'm going to open until I can find out how to do it without doing these steps. I'm just going to do this step. This is just a placeholder file, so I can open up Claude Code. Yes, you can move the trash. Now, remember, we only use 4.5, so let me go grab that command so I can get 4.5. All right. Here we go. Clear. Here's 4.5. What I'm going to do is I want to build some context, right? Because it's the first time we're talking with Claude Code. So let's go ahead and build that context. Can you explain what you know about gap fill strategies for algo trading? Option algo trading? All right, so let's build some context. Beautiful. I'm not from, okay, come on now. Okay. Goodness gracious. If you're asking about if a gap fill strategy is typically involves trading around the price gaps where the asset opens significantly higher and lower than the previous close with the expectation that the price will fill the gap by moving towards the gap level. For options, this might involve buying or selling options to profit from the expected gap movement. So what I'm going to do is like, all right, I like that. Now review the following Pine script from TradingView and explain this strategy. Let me just try to spell right. Strategy like I'm 12 so we can understand understand what is going on in it. Beautiful. So let that output and run. All right, just here we go. This script trades gap fills when the market jumps up or down at open, then comes back to the close. Then comes back to close the gap. Here's how it worked. Imagine a stock closes at $100, but opens at 102 today. That's a $2 jump. That is a gap. The market often comes back to fill these gaps. The strategy: it finds the valid gap, needs at least a 20% or 2% difference, right? 0.2% difference between yesterday's close and today's open. Gap up, open higher than yesterday's close. Gap down, open lower than yesterday's close. Trade, we're going to go long. We're going to, when there's a gap up, wait for the price to dip below yesterday's close, then close back above it. Gap is filling. Short, when there's a gap down, wait for the price to rise above yesterday's close, then close back below it. Gap is filling. Protection with a trailing stop loss uses ATR, average true range, to measure volatility. Stop loss trails that is entirely too slow. And I'm going to adjust this for 0 DTE options. These are options that expire the same day. Now, this particular one right here is a bit too slow, and y'all are going to recognize why as soon as we get into that. Visual, gap up, okay. Gap down, purple line shows the stop loss. Think of it like the market jumped too far. Let me bet it comes back down, but I'll bail if I'm wrong. Okay. Beautiful. Now we want to adapt the following strategy for 0 DTE options for IWM, for both call and puts. Now let's discuss how this will work, starting with the entry, how the signal is generated or triggered. All right, so all in Algo is, right, it's a set of rules and instructions. So what we're doing right now is coming up with our rules and instructions, right? So it probably is going to be a bit meticulous. Okay, I can stop talking. Great. Let's design the entry signal for 0 DTE options on IWM. Remember, IWM is the Russell 2000, and here's how we'll adapt this gap fill strategy. Step 1, identify the gap. Identify the gap. Pre-market / market open. Compare IWM's open price to the previous day close price. Must be at least greater than or equal to 0.2% gap. This could be adjustable. Classify as a gap up or gap down. Wait for the gap fill attempt intraday. For calls, the gap down scenario. If IWM gaps down at open, wait for the price to move up. Crosses above the yesterday's close. Signal triggers when the candle closes above the yesterday's close. This suggests that the filling upward by calls. For puts, IWM gapped up at open. Wait for the price to move down and close below yesterday's close. Signal triggers when the candle closes below yesterday's close. This suggests a gap down. Time frame. All right, so perfect. I love it when it goes exactly how I want to. Time frame. We are going to be using the 1 minute time frame. Confirmation. We are thinking maybe 1 candle close or enter as soon as we see it. Let's make it such that we enter immediately. Then we can adjust based on results if we need to wait for confirmation. Time window. We are only going to be trading once per day and only between 9:30 a.m. and 11. Let's do 11:11 a.m. Strike selection. We're going to do delta min of 0.10 and max of 0.44, premium min of 0.12, no, premium min of 0.5 and max of 0.44. Ah, shit, we might as well. Oh, you know what? How much? Okay, what else? 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 You got your pin, you got your max. 5, position sizing, and TP and SL. Starting balance is $100. And I want to be able to dispel the notion that you need thousands upon dollars to be able to invest in options. The way we're doing it is very particular, right? And you're going to see, is it going to be successful? I don't know. You got to wait till the whole video to find out. Oh, let me also preface, this is not financial advice. This is merely educational. If you do seek financial advice, please make sure you talk to a financial advisor, certified financial planners, or those that are licensed in order to assist you with your questions, comments, or concerns. Perfect. So what I want to do is to be able to dispel the notion that you need thousands upon dollars to be able to invest in options. No, the way that you're going to be, the way we're going to be doing it here, you're going to see we're going to be adding a little bit of edge as we go on. So I need you to follow along. If you do have any questions, please make sure to pop them off in the chat. And then let me just keep going. All right, starting balance is going to be 100. If balance is between, if balance is less than 499, we are going to use up to 80% of portfolio balance. If balance is between 500 and 1K, can use up to 38% of portfolio balance. And if balance is greater than 1K, can use up to 22% of portfolio balance. TP, we're going to take profit, how we exit. TP1 is going to be 28.5%. TP2 is going to be 22.8%. And then TP3 is going to be 16.5%. SL, what is it, 16.5? Nope, 14.99%. Stop loss, and the stop loss is letting, so take profit is letting us know, hey, if we reach 28% of the position, get me out. 22%, get me out, right? Stop loss is letting me know, hey, if the position goes down 14% or 15%, get me out, right? These are our rules that were coming out for this particular algo. Okay, we are doing a full exit, no scaling out. Once one of these elements are met, we are aiming for the higher TP, but exit whichever happens first. Now let's continue the discussion. Beautiful. So what I need now, I need to go grab a reference backtest, and that reference backtest is, hold on. All right, let's continue to read this. Perfect. Now I understand the parameters. Let me continue by mapping out the strategy. Entry, immediate execution, 1 minute chart on IWM, the Russell 2000, the smallest 2000 company, not the smallest, just the small 2000 small cap companies, right? Within the New York Stock Exchange and the and NASDAQ. We're trading windows between 9:30 and 11:11, 1 trade per day. Entry, prices above yesterday's close, gap up scenario. Put, okay. Option selection, 0 DTE only, find the closest strike matching these criteria. I want to do something different there. Position lodging. Okay, question. How do we get real time? We have a reference file for you to review in order to answer this question. Review. That's why I was trying to get ready and be like, all right, Jid, I already got my reference file for you. But hold on, let me go grab it. Where you at? IWM gang. And then it's you, right? It is you. IWM, IWM. Here is another strategy. You are not copying this strategy, merely reviewing how to create a backtest. What is a backtest? A backtest is being able to take your strategy, drop it off in a time machine, and seeing how well it does in 2024, 2023, so on and so forth. What a backtest allows us to be able to gauge if it does well in the past, then there's a high likelihood that it'll do well in the future. There's no guarantees, right? It is just a high likelihood that it'll do well in the future. Excuse me. I'm still getting over a little bit of a head cold, so that's why I sound a little bit nasally. I feel 1,000 times better. Thank you for asking. But if I sound nasally, that's what it is, right? And if I have to mute the mic, I don't want to cough in your ear, so I'm just going to cough and come back. But nonetheless, let's keep going. To create the back test, two, 2 through 4, C reference back test. We are starting with 0.124 gap minimum, and we'll adjust based on performance. Now review and advise once you have a context before we start coding the back test. Now, what do you think we should call the back test? I'll take suggestions. I always like to use different cool names, right? Not just gap fill backtest, right? .py. And I'm using Python. Did I talk about that? Yeah, I'm using Claude Code, and within I'm using Cursor, and within Cursor I'm using Claude Code, and we're using Python. Python is going to be the language that I'm using. That's the language that I've learned on when I first started this coding endeavor back in April. All right, I can stop talking. Perfect. I have full context. Here's my analysis recommendation for your gap fill strategy. Backtest key observations is the Greek, the open, high, low, close, both stored in IWM gang. We're going to load the data, loop through the data, signal generation at each, option selection with premium delta, filters, position class management, and then calculation metrics. All right. Signal, position. Wait. All right. Everything almost looks good, but we want a more elegant way for this strat to select strikes once the signal is triggered. Based on the available data we have, give me two because it's going to over index on it. Give me two great ideas that will make sense with what we're doing. Beautiful. All right, let's wait for the ideas. And then, all right, here we go. Great question. Here are two elegant strike selection methods that align with the gap fill mechanism. Gap distance between delta targeting. Since gap of different sizes have different fill probabilities, adjust your delta target based on the gap, right? So gap percentage of 0.3, higher delta, closer to the money. Oh, that's interesting. Logic, small gaps fill reliably, pay up for higher delta. Large gaps are riskier, use lower delta to manage the cost. Implied volatility ranking. That's interesting. Select strikes with favorable IV compared to the day's average. Calculate the IV percentage from the available strikes. Filter the candidates with the IV greater than the mean, relatively cheap. Then pick the closest target from the remaining. Gap fills are mean reversion plays. Buying options with lower than average IV gives you edge when the volatility normalizes. Option 1 is cleaner, more directly tied to your signal strength. Option 2 requires more data stability, but could filter out overpriced option. What do y'all think? This one is interesting, right? Based on the gap, that's going to be how we're going to select the price. Let me try that. I think I like that. All right. We like option 1 for now, and maybe we'll try out option 2. This is what we're thinking. maybe let's code it in, but set to false for now, while we gauge option one's effectiveness and performance. Now lay out the strat so we can review it before we begin coding. All right, beautiful. I'm really loving this. While this outputs, let's go look at IWM real quick to see if there's been any movement. Oh, a little bit of news coming today. Latest update is Dogecoin bull run over. Analysis predicts when Dogecoin rallies. Okay, this has to do with cryptocurrency, not IWM. I mean, there was a bit. Let's see. If you would have bought, okay. Okay, I can stop talking. Excuse me. All right, IWM gap fill strategy, complete specifications. What I'm going to do is just copy this and then bring it over. Beautiful. Gap fill minimum. All right, TP, slippage, toggle, use. Okay. All right, we're Gucci them. Let me just drop your right here. All right. This is sounding great. Since I didn't get any, let me just check the comments. Let me just check the comments. All right. What I'm thinking about calling this one, let's call it Gappy. This is Gappy baby bt.py. Let's create the backtest for this and start with 2024. Beautiful. Now I want to do, let's just make sure we get organized. Create a folder called backtest results. And within that folder, create 2023, 2024. Shit. Let's do 2022, 2023, and 2024. And within those folders, create V1 baseline. I forgot to do that. Beautiful. 2022, 2020. All right, beautiful. This is where our backtest results are going to go. So we can stay organized. Perfect. Let's go look at, while we're waiting on the code to finish up. I just want to do a quick test, right? If we would have bought, where's the ruler? Where's the ruler? I'm tripping. Here's the ruler. If we would have bought and then sold where it said sell, how much we would have made? That doesn't make sense. That's it. Hold on. I'm tripping. I'm tripping. Hold on. I still did it wrong. My fault, y'all. A little 33 minutes for 8%, bro. What about if we sold up here? 14%. That's crazy. All right, but as you can see, there is a bit of bearish momentum going on right now within IWM. I mean, I can understand that, right? Because, I mean, these are small cap companies. Okay, hold on. What is the difference between small cap, mid cap, and large cap companies? Give me some examples as well and explain like I'm 12. All right, just when I was going to have it explain it, our backtest is ready. Our backtest is ready. All right, let me copy you. Here we go, loading up the Greeks. And I'm going to keep that there. Don't worry, I'm going to get to what is small cap, mid cap. All right, while that's loading, let me just go over it real quick. All right, what does cap mean? Cap is often referred to market capitalization. Oh, shit. All right, here we go. We're at $87 right now. I forgot how this back test runs. 74. So it's looking for gap 81, 86. So as you can see, entry executed. Okay, what is happening? Let me look at some of these positions. It's like, are we hitting? Are we not? We're at 144 right now. 160. So as you can see, just look at the bottom, trade 18th, right? You'll see the balances increase or decrease accordingly. Right now it's at 113, 23 trades. $127. That's interesting. It's like we're finding it, but we're giving back too much money, in my opinion. All right. Maybe we need, I really want to find out what's going on, because it's like we really can't break that that resistance level, if you want to keep it there, of okay, we just broke 200. I was about to say we can't get over fucking $100, bro. We're at 271.26 right now after 40 trades. 310 after 41 trades. We just dipped a little bit. We just gave back some money. We're at 140. We just gave back some money. I'm not going to hold you. I mean, fundamentally, looking at the strat, it is active. I'm not going to hold you, but I'm noticing that it's giving back way too much of the profit. So that profit factor just telling me a lot right now. So for every dollar that we're losing, we're only making $1.19. The 63% win rate, yeah, that's okay, but let's just talk about the efficacy, right? The max drawdown is high as fuck, 62%. So what does that mean? Our strategy starts at $100. It dipped to, let's call that 48, 47, 38, right? And then it was able to rally to 220, 221, 34 after 52 trades, right? I don't know, kind of sus. The peak was 310. Sharp ratio is 0.24. Best trade was $65. Worst trade was 77. Average hold time was just under 3 minutes. All right, let's go ahead and look at these results. That's what I want to do. Let's say copy these results. Thank you. Review results using grep and awk terminal commands. Then let's discuss findings and where we should go from here regarding params. I'm just gonna say params right now, but that's parameters. Optimization / adjustment based on what we see. Beautiful. All right, so we ran our first back test. It was 63%. Maybe I should write this down. Huh. Let me write this down. Back test V1 baseline 2024. All right, where do we get 221? And then 63%. That's all I'm gonna do. Win rate 63%. So those are the only two that I really care about. More so just the win rate, homie. Or behind the right page. Okay. There we go. So what's happening right now is Code is using different terminal commands. Awk and grep are just grabbing, right? Instead of having to read the entire file, it's going to grab items from that particular file in order for it to do its work, right? So I've asked it to grab and go through all of the trays and let us know what worked, what didn't work, and what we need to adjust / change for this strategy in order for it to get better, right? Gappy backtest journal.md. Beautiful. I have our backtest journal. This is where we're going to add our notes so we can stay organized. Ooh, market is a bit. What direction you want to go? Return 121%, 65% win rate. 63% win rate, 52 trades. One worked. It really didn't. Max drawdown is significant risk, barely profitable after fees. 19 trades hit stop loss, 36% of them lost $626. Average loss was 33, average winning was 22. The losses are bigger than the wins. It's killing the risk reward. R&R's risk reward ratio. Gap distribution, small gap, medium gap, most common, and then large gap. Exit. Okay, average hold time, fix the stop loss, change from need more room for 0 DTE volatility. The current stop loss gets hit on normal price action. Adjust, up, up, up. If we widen the stop loss, we should aim for higher TPs to maintain at 1.5. For every dollar that you make, you want to be able to make more dollar risk reward, right? I'm not doing that. I'm keeping it at, but let losers hit theta decay. Tighten the gap minimum up from performs well. Filter out the noise. Avoid the ultra cheap lottery picks and the overpriced options. All right, so this is what I'm thinking. I'll go stop loss of like, hold on, before I even want to touch the stop loss. I'll go gap up. I'll do the gap up minimum. So I'll do that. And then I'll test with these new premiums. All right. So we're going to do gap min percentage of 0.0. We're going to show I have a brain. 0.18. I'm not going to use theirs. I got a brain. Premium min of 0.09. I like 8. And then max of 0.33. What else? Oh, I don't have a max hold time. Oh, thought there was a max hold time. If not, let's add one of 444 minutes and keep everything else the same. I thought we added the max hold time. I'm not going to hold you. I thought there was a max hold time. I guess not, fam. I guess not. That's fine. That is super Gucci. There ain't no problem with that. Did I do that? That ain't my fault. I think I was just talking and it was mute. So my fault about that. But y'all saw what I was typing. I'm going to get used to this whole pivoting back and forth thing. Draw me now. Draw me. I think I was just talking and it was mute. All right, here we go. 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 Wait, this is a RSI divergence detection, no gap fill confirmation. Let me break this down. How does indicator use? Momentum reversal. The problem is that this conflicts with your gap fill strategy. Okay. Why this won't work for our strategy. Average hold time, gap fill, better confirmation idea for gap fill. We want to immediate entry on the gap, but with some confirmation. Here are options. I like the volume confirmation. I'm not going to hold you. Candle pattern confirmation. For gap down, wait for the first green candle. Buying pressure, wait for the first. What do y'all think? Price action confirmation. Enter after 2 to 3 bars after movement. No, that's still waiting. No confirmation, pure gap. All right. Let's start with no confirmation. Thought this would help. But nonetheless, let's proceed to build out V5 based on this. Gucci. This. All right, we're Gucci them. My fault about the whole volume thing earlier. I'm still new with this whole screaming thing. I ain't gonna hold y'all. But oh, okay. Let me go ahead and let's get organized, fam. Let's do the same here. Let's get organized, fam. I just need you. Thank you. You're amazing. That's what I'm saying. Because I think this is the play, y'all. Because before, what we're doing, we're waiting after the gap filled. Once the gap filled, then we want to enter. That's habaloni. All right. Python. Let's go ahead and run it. Ready to test. Now we enter immediately. Beautiful. Beautiful, beautiful, beautiful. Let's see how this works out for us. If you do have any questions while I am working on this, please feel free to be able to ask. Wait, now we're not finding any. Wait, homie. We're not finding any gaps now? Hold on. There's a problem. I don't know what it is, but there's a problem. Okay. We just were running it, but noticed nothing is triggering. Let's find out if there is a issue and fix it. I'm talking about nothing. I see the issue. The backtest is detecting gaps but not entering trades. Let me enter the logic. And you see that. Found it. The problem is the timing mismatch. The problem is the timing mismatch. Okay. The issue is that the bar time requires the exact 9:30 to match, but the first bar might be 9:31, or we're checking it wrong. Let me fix this. Wait, that's not quite right either. Let me think about this differently. We need to enter on the first bar after detecting a gap within the entry window. Double check and make sure we're Gucci, fam. Not G fam, just fam. Watch it get all like urban. Watch it get all like urban. I ain't tell you that I thought I was tripping. I was like, okay, hold on. We're seeing a gap. I notice a gap. We're not sliding on the gap. All right, come on. Let's ride. Let's rock. Ready to rock. Run it. Run it, run it, run it, run it. All right, let's go. Let's check it out. Let's check it out. All right, beautiful. So we can see our gap fill is running. That's crazy. We may, I don't know if this account may survive. It is at 2030. Yo. It's struggling right now, fam. The account was blown. The account was blown. What did I do? Review and let's discuss. Account was blown. Yeah, catastrophic, bitch. Catastrophic, bitch. Running, 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 running. That's all right. That's what we learn. That's what we learn. What do you want to do? V1, V2, the smoking gun, the stop loss. Stop loss hit 60% versus 36%. V5 had fewer trades. V5 had more stop losses. V5 were more brutal per loss. Okay. Entering too early kills the win rate. Wait for the cross. Immediate. Gap down. Entered immediately. Stop loss hit. Lost $20. Wait for the cross. Never entered. Gap didn't fill enough. V5 is forcing bad trades. V1 filter them out. Trade 4. Lost 22. Never enter. The wait for the cross logic in V1 isn't slowing us down. It's filtering bad trades. When we wait for the cross from the previous close, it's proof that the gap is filling. Without that proof, we enter on gaps that won't fill. We enter on the reversal immediately, and the win rate collapses. So your theory was wrong, respectfully. This fucking guy. Wait for the confirmation, filters out bad trades, go back. No. All right. We want to go back to V1, but we want it to be a bit more aggressive, fam. Advise how we can do it before updating the code. This gap fill, bro, I'm not going to hold you. It ain't the bane of my existence, but this bitch just be freaking annoying. All right, gap fill. I'm just going to, it says gap fill strategy. Oh, and it's super short. Let me see what this is doing. Let's see what this is doing. I should have limited. I knew I was supposed to limit it. Increase the position sizing. Version 1, aggressive. More contracts per trade, bigger wins, bigger losses. Could, okay. Increase the profit. No. Multiple trades per day. Nope. Trade both directions. Trade gap up. Wait. V1 trades both directions. Trade gap up and gap down separately. Focus on what works best. No. Extend. Nope. loosen the gap, tighter stop loss. The only thing I'm like even considering right now is a higher these are trash. I'm not gonna hold you. Yeah, these recommendations aren't really it. We want to test if the strike selection may be the culprit. Let's toggle what we are using to false and use the IV, and then drop the minimum gap percentage to 0.0008. This makes it more aggressive, right? Hold up. Let me think this through. Hold up. Do the same here. If this doesn't work out, I'm just gonna pivot. Man, I got another gap fill. It's in the holster. It's in the holster. It's ready, and it's in the holster. Let me just make sure. Immediate. Okay, perfect. Okay, now work mix. I keep forgetting to let me explain what you're asking. The filter, this filters options to only buy the ones with IV below average. It buys cheap options with lower implied volatility. The gap, is this more aggressive? No, this is actually less aggressive, more conservative. The IV filter, fewer trades, not more. The grant more trades, but tested on V3 5 point. Okay. All right. All right. Trade higher delta. If you want aggressive strike selection, aggressive version, higher premium but more aggressive. No, your ID plus will likely underperform. Keep as is, it's already good. Increase position sizing, allow 2 trades per day. Raise the. All right, let's test the min gap percentage of 0.0008 and keep everything else the same and gauge performance. My honest opinion, I don't know. I really don't know. I mean, I guess that's a good thing. I just need you. Thank you. I can see the code still has the V5 immediate entries. Let me revert it to V1 to wait for the cross and okay. Let me see. Let me see what it does. If it's something that is gonna bring my cup, let me see what it does. And I already have, and I've been trying to get this little gap fill. Okay, we still got our 107.52. I don't know, man. Trade 8, 103.44. The problem is we're giving back too much money. Y'all saw it? It just went from 264 to 166. Like, it hits. I'm not gonna hold you, but like We're giving back the fuck too much money, man. Yeah, right now we have a drawdown issue. And I thought being able to make it exit earlier. Yeah, I don't know. This is deceiving. This is deceiving. I'm not going to hold you. This is a bit deceiving because we're giving back too much money. I mean, yeah, we getting. I don't know, man. That little too. I don't know. The shit looks good on paper, but it's a bit deceiving, homie. See what I mean? See what I mean? Now I'm curious if we keep the gap down levels where it's at, but I'm gonna add a little volume confirmation, or I'm gonna make it a little bit more aggressive and just add the volume confirmation because this shit right here. I mean, 60. I mean, it's damn near almost the same. We just caught a little bit more trades. Review and let's discuss. It's damn near the same. We just caught a little bit more trades. I'm not gonna hold you. Interesting. Slightly better than V1, bitch. If you call that slightly better. All right. Objectively looking. Slash reviewing. Why are gap downs performing worse than gap ups? I mean, bitch, barely. It's that max drawdown. More opportunities, slightly higher return, profit factor, max drawdown, average trade. Gap ups underperformed double. Gap, okay. Good. The problem is gap up trades were loser, gap downs, okay. Keep, but filter out, nope. Stick with overall best, nope. What are we missing here so we can get this to properly work? Again, do this without introducing bias or overfitting. Hold on. What am I missing, homie? No, you got it. Should we just go bring in you know what? I'm like curious. Should we bring in 4-point little opus? Let's try it. I'm gonna try for like 2 minutes, bro. Statistical facts, no bias. Gap down, gap up. Average gap size, average gap size. Yep. Why gap ups puts underperform the market structural asymmetry, real, not bias. Gap downs, market opens lower, driven by overnight fear, institutional by the dip at open. Snap back at 2.3, mean reversion is fast and clean. The gap up, driven at overnight optimism, momentum, institutions might take profit. Slower, choppier, 3.8. Mean reversion is slower and messier. Option symmetry. Okay. Same. Puts have volatility skew. Puts have a higher IV, more expensive, big more money to lose. The data driven. Gap up 13 stop losses is on average 33 each. We're not what we're not miss excuse me, what we're missing, not overfitting theory. Put options are fundamentally harder. The call options gap up fill market naturally wants to go up. Bias, bullish bias by the dip is a strong instinct. Call benefits from the natural market tendency. The put option fighting against the natural up bias. The profit taking is less urgent than fear buying. Puts fight against the grain. Okay. What we're not missing. This isn't overfitting, consistent, accept reality. Trade gap ups only, require larger gaps for gap up. Different. I don't know, man. I feel like you're giving me basic shit. Here's what I'm gonna do. Update with what we learned so far. And then let me just go get 4.5 obvious ready. And then we're going to run it and see how well it performs, homie. And I'm not gonna hold you. I told y'all right now, Abba just eats some shit. It's just like Pac-Man, bro. It shouldn't even be called fucking Abba. It should be called Pac-Man. This is crazy if I'm. Bum ba-dum. I'm telling you, I'm gonna hit with this little gap strategy. Our gap strategy is gonna go. Bazook. Damn, bro. All right, there we go. There we go. I say keep a close eye. Keep a close eye. All right, what I'm gonna do is just close you out. Oh shit. Get a new terminal. Go ahead and do Office 4.5. Ah shit. You see? The command is not found. Am I tripping? Why isn't it working? Hold on. Why aren't you working? Meet 4.5 for professional work. Y'all really going hard with that one. Review and provide the proper prompt so we can use it. Sometimes you got to go to Claude to fix Claude. Come on now. Come on now. Shit. Come on. Damn, it's going to make me look bad. I'm just going to use what I know because, hey, you're trying to use a model in the name command. Your prompt here. We want 4.5 office. What is the command? That's crazy. I'm trying to use what the fuck y'all promoting, and there's no, you see? Okay, let's try this. Oh, you know what? Matter of fact, hold on. There is a 4.5 because I'm not gonna let you make me look fucking stupid. No, this is what I want you to do, and I gotta keep track of. Hold on. Which model are you? Answer quickly via TLDR. 4.1. I want 4.5, kid. See, that little bullshit don't work. I'm not using, I might as well just use what I was using, man. See? But if I go get, oh, you know what it's missing? I just figured out what it's missing. This is how I usually call 4.5. It's missing a little model bullshit right here. Hold on. Claude model 4 point, wait, Claude model and then obvious. Okay, beautiful. Then I should be able to do, take out the obvious, boom, 4.5. Oh shit, what am I missing? Claude model, Claude model 4.5. Oh my goodness, I'm like losing my shit right now. 4.452. Okay. This may have worked. Okay. Which model are you? Advise via TLDR. This is fucking bullshit. I'm not gonna. Oh, now you want to trip, bruh. This is wild, fam. Which model are you? See? I'm just gonna stick to what I know, bro. 4.5 ain't working, and y'all just selling me a bill of goods. I'm gonna use my 4.5 that I know to work. Not gonna hold you. Wait. No, that's the okay. Review and let's discuss. Explain to me like I'm 12. Use grep and awk to understand file, then explain to us before we proceed with the new ideas to backtest. That's some bullshit. I feel like I just wasted some time. Y'all pushing out there. 4.5 work. 4.5 obvious work. It work. Bullshit. Ba-dum. Selling me a bill of goods, bruh. Again, what we're doing right now, we're building contacts. Should only trade no. Only trade gap up. Excuse me. Maybe this strategy ain't it. I'm not gonna hold you. Sometimes strategies aren't it. All right, review this new foundation for gaps and explain what is the difference, which would work better for 0 DTE, and let's discuss from there. Let's discuss it from there. I got a new Pine script for gap up, and I really want, great question, let me analyze the TradingView gap up strategy and compare it to your current Python. I really want us to be able to, hold on, interest immediately on gap, no confirmation, trade session, open, sets limit order at gap, okay. Because I think being able to trade immediately on the gap, I mean, that's where it's at. But again, we got to do this right. We got to do this the El Correcto way, El Partner. Damn, I really should be limiting your ass to what it does. Upward gap today open, yesterday's close. Pine script gap must be outside of yesterday's entire range. Your Python script is more lenient. Gap is just needs to form from yesterday's close. Exit the Pine script exits when the price reaches yesterday's high for gap down, low for gap close. Key difference for 0 DTE. Your is more suitable. Okay. I don't want to do gap up only. Use the Pine script exit logic instead of a fixed TP. The gap fill, calculate the option price at the underlying hybrid entry, only gap down. I don't want to do gap down. Test B, gap fill, exit instead of the fix because the Pine script logic makes sense. Exit when the gap is filled. 0 DTE. This could be better than the arbitrary. All right. We want to test option B. How would we do this before updating the code? Advised via TLDR using only 212 total tokens for output response. I'm going to get me a little gapper. You going to blow past it? Oh, you said fuck me. Instead of a fixed TP, use the entry price times 1.285. Exit when the underlying IWM crosses back through the gap level. Implementation, track the gap level previous close to target. The end position, standard loop, check if the IWM crosses this level. Exit when the cross confirm plus option profit is greater than 0. Why this works, gap fills equals the underlying move. Options amplify. All right, let's update and test it. Let's see. I'm interested. This may slide. This may be the one little thing I needed to be able to save, homie. It's interesting we're doing gap fill on IWM and not QQQ or SPY. I mean, I kind of like it. I'm not going to hold you because I think there is some edge in what we're doing here because everybody normally doesn't trade IWM. Like they're going to, oh, fucker. Double check and make sure. Good. What the fuck did he just do? Do the same here. All right, we're Gucci. Fall back to what now? Fallback still uses if the gap doesn't fill. Is there a max hold time in it enabled? You know, I'm just gonna keep it the way it is. Let's just run it. I know the max hold time is not. Oh, you fucker. I know the max hold time is not enabled. I don't know. I don't know. Stop giving back money. You're giving back too much money. We're still giving back too much money, homie. This is deceiving. This is fucking deceiving. I'm not gonna hold you. See? We went from almost $400 to $2, bro. We're giving back way the fuck too much money, man. 71%. I mean, I guess. Review and let's discuss. One thing we noticed, we are giving back way too much profits. What are you seeing in the data? What is the data telling you, partner? What the data is telling me is that we're giving back too much money. Yeah, we make better, but I kind of want to see 485, 93, or 92. Then it's just like boom, 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 boom. Oh, stop loss is too tight. Are you telling me that the stop loss? All right. Huge improvement. Yeah, but it's fucking deceiving, bro. Gap fill exit, new exit type. 10% less. Gap fill exit is crushing it, 30%. Okay. Made, giving back peak. 4 big losses after the peak. Stop loss, stop loss, stop loss. These 397 came from stop loss. The balance hit 495 when your position sizing formula kicks in. If the balance is less than or equal, okay. You were here at 495. You risk 38% per trade. Who the fuck is telling you to do that? No. Daily loss limit. Reduce stop loss after peak. Starting after 3, X profit, stop loss, tighten instead of what's working. No. Objectively, let's look at the trades of what worked and what didn't and see what the data is telling us to do. Objectively, of course. Objectively, of course. Of course, of course, of course, of course, of course. Objectively, of course. What we do, what we do, what we do. I should have gave your ass that same limit because now your ass wanna just do. Oh, you know what I still gotta do? I still gotta switch over our bots to Alpaca. I'm not gonna hold you. I made the executive decision that I'm not using IBKR as my primary anymore. We're going to be using Alpaca because it's a lot easier to be able to run multiple bots on this. All right. Gap up, stop loss, keep finding what the data says. Hold time is the #1 predictor. Winners exit in 1 minute. Losers is 3+ minute. If trade doesn't work in 2 minutes, high chance of stop loss. Gap up, struggle more. Delta doesn't matter. The big 4 killers. Objective. Ooh, I like that. Tiny filter. Wide trade only. Too small to fill reliably. Dynamic stop based on hold time. Slow trades equal higher probability. Exit faster if bleeding. Max hold time. All right. Let's do max hold time of 2.8 minutes and keep and 0.0010 for gap min percentage and SL at 12%. That's fine. I'm Gucci with that. I think it's gonna work. I forgot to turn your little auto back on. Oh shit. I forget you like quick fast with that, bro. Do the same here. Update with what we learned. All right, beautiful. Beautiful. Here we go. Running it again. We are running it again, fam. So what we did is we made the stop loss a little tighter and then a max hold time of 2.8 minutes. I still think we're giving back too much money. Come on. Get there. We're going to cross 1,000? Shit, we made the strategy work. Holy shit. That's what I'm saying. I got too excited. It just humbled me. Look at that. Look the fuck at that. Look at that. 2.6 is finally respectable. 1.189. Finally respectable. Finally the fuck respectable. Review and let's discuss before we run on 23. Now let's see if we can go up one more. You feel me? We done hit a little bit. I ain't gonna hold you. You feel me? And let's see if we can just one more. You see, baseline. Now look where we at. I told you the time stop was gonna be it, bruh. Like, but oh no. We kind of did a couple things. I'm not gonna hold you. That little formula that I took from TradingView, that one helped. I'm not gonna hold you. The time stop, that one helped. I'm not gonna hold you. Let's see. Let's see, fam. Let's see. All right, what are we doing? What are we doing? All right, come on. Come on, come on, come on. The trade count is too low. Retest with okay. Six, okay. Crushed it. Still dominant. Elite tier. Yeah, especially I mean this ain't elite. That's kind of good, but that ain't elite, you feel me? V8 run as is. If trade count is low, retest it. All right. Let's update. So we can run on 23, then provide the command so we can run it. Let me just get this ready. What I'm going to do, let me just open up another. Let me just open up another. Do the same here. My fault. I know. I know. I'm not going to hold you. This is because the fastest bot before, I think was like 4 minutes, 2 minutes is a Grand Prix record. I'm not going to hold you. All right, thank you. We're running it on 2023 now. I'm trying to see the results on 23 and see how well it goes. So let's see what we're doing. Damn, we're getting a lot more activity. I'm not going to hold you. We are, I don't know the efficacy of it. You know what I mean? Because it's still giving it back a little bit too much money. We are still, 420 type shit. That was fast. That was fast. 61%. 158. 170. I don't know. I still think it could be a bit better. I'm not gonna hold you. I still think we got a little bit more edge to add into it. I'm not gonna hold you. Review. And let's discuss. You know what I forgot to have it do? Update the journal. I mean, kind of got no reference point because it's my first time running it on 23. Kind of my first time running it. I'm still gonna run it or try this on 0.09 because we did 0.08, 0.12. Let me try 9. Let's see what 9's screaming. Or I could be a little weird. 8.5. I'm gonna try 8.5 instead of 9. Let this trick know I got a brain. So what is this? We need to update the journal for V8 and V9 2023 baseline. Then we have another idea to test. Want to test the min gap percentage of 0.0085. Update the backtest first before updating the journal. I got an idea. 2023 V1 baseline. Let's move there. I'm going to run it on 23 first. So what I want to do, who are you? You're 23. Clear. Run it on 23. Run it on 23. Let's see what we're doing. That's crazy. It made it less? How is less of a number? Okay, I don't understand this. Y'all gonna have to that don't make no sense. Okay, this doesn't make sense. This doesn't make sense. We just ran it and it had less trades with a lower requirement for gap. What are we missing here? We're missing something, partner. You're absolutely right. This makes absolutely no sense. A gap of 10 gotta be 52 trades, but 0.85 is 5 trades. The gap went up. Oh, I see the issue. This is a huge gap filler. Finds more gaps, finds only large gaps. Oh, so if we want to test a gap percentage that allows for more, we go up, like testing 0.18 or something like that. Is that right? No, the opposite. Lower number, more trades. Higher number, fewer trades. Lower number, more trades. So why didn't it work here? Oh, allow. So to test more trades, use a smaller number, more trades than V8. Okay, which one? All right, let's test 0.03%. That is a lower number, right? If so, let's test. So I got a brain. Yes, that is a lower number. All right, beautiful. Let's test it. I can just trash this one. I'm not going to hold you. All right. I love it when you do it. Let's see what it's screaming. I mean, we got the makings of a little strat. Okay. Now we getting some action, baby. But not really a lot of action. This is kind of deceiving. This is a bit deceiving, fam. I don't know, because we're still giving back too much money, just based on what I'm looking at. It's at just under 400, just under 500. That's kind of deceiving. Kind of deceiving. Okay. Review results and let's discuss. Question on the table as well. We noticed that gaps were detected, but no trades. Why? Also review results and let's discuss. All right, I'm going to let this go. Y'all give me like 2 shakes of a minute. 3. The 12 extra trades, that's the first thing I saw. The 12 extra trades lower the win rate quality. These are fake gaps that don't have real mean reversion edge. Remove these, included them. All right. Before, we want to test 0. What was it? 0.03 ain't it? So 0.08. Again, this is lower than 0. Right? right, this is who? This is 23. Get the name from the file name here, create folder, and move it. Yes. I'm doing 23. Thank you, homie. I appreciate you. Oh, did you answer that question? Okay, let's review the results first. Maybe we found something. I don't know. For me, it's still giving back too much money. Yeah, for me, it was still giving back too much money, homie. Yeah, this ain't it. This is not it. Right. Review and advise. Then want to test 0.05 before we finalize this. Yeah, because I'm not going to keep. I mean, I think this is the main trigger, right, for trades. Yeah. Yep. Yerp a derp. Yerp a derp flirp. Part of the process, homie. This is part of the process. I'm not gonna hold you, man. I haven't seen the 4 extra trades added. Lower quality. All right. All right, let's see. Let's see what it does. I want exactly half the sweet spot. The Goldilocks spot, quote unquote. Yeah, I think 0.10. I'm gonna stop playing with this. I'm gonna reject that one. Okay, we're going to reject it, and go back to sweet spot. Now, what is the other items required? Okay, you know what I'm noticing? Now, explain this to us. We see a gap being detected, but no trade. Why? Great question. Let me explain exactly why these gaps are detected, but no trades happen. Your strategy has 2 filters: the gap detection and then the trade entry. Requires confirmation. Wait for the price to cross above the previous close. Wait for the price to cross below it. Oh, I got you. Remember V5, the immediate entry, no waiting for the cross. The wait for the cross confirmation filters out 50% of the bad trades. Only trades when the gap is actually filling. Increase the win rate. So think of it like fishing. Gap detection, you see a fish jump, gap exists, wait for the cross, wait for the fish to bite your hook, and then trade entry, reel in the fish. You don't cash your line because you saw a fish, you wait for it to bite. Gap detected, but the price never crossed back. Okay. All right. Is there a way that we can enter when we excuse me. Is there a way that we can enter right when the cross is happening before waiting for it to actually cross? Does that make sense? Does that make sense, homie? Beautiful. Beautiful, beautiful, beautiful. Yes, that makes perfect sense. You want to enter as soon as the cross happens, not wait for the next bar. The current logic may be delayed. Check after the cross has already happened. The IWM price gap price is already below. Enter on this bar could be late. You want to catch the cross immediately. Detect the moment of the crossing. Previous, above, cross detected. Enter immediately. The logic, the code checks if the price is already on the other side. Problem, this enters after the cross, potentially missing the best entry. The solution, detect the cross moment. We need to track the previous bar price and detect when it crosses. Track and loop, gap down. Check if the cross up, then the previous close, cross detected. Okay. Is this better? New. Um, let's proceed to implement V12 to enter when cross is detected. I don't know. I think this is maybe a little bit better. Who knows? This is part of the. This is part. Oh shit! I forgot to. All right. Here is two that needs to be done for 2023. Um, did I? All right, perfect. Okay. This is V12. Okay. I love you for that. Thank you for being great. Now we're entering when we detect the cross, right? Not when the cross actually happens. So let's see how this plays out for us. Let's see how this plays out for us. Whoa. I'm just going to be quiet and wait. Hold on. Wait, this probably like actually slides. Our trade count went down though. Why did the trade count go down? Don't know. Why did the trade count go down? Performance got better. Interesting, interesting, interesting. Incredible results. Why the trade count went down? This is good. I mean, that's objective. That is subjective. All right. What is your reasoning behind this? Enters anytime. O logics enters anytime on the other side of the previous close. Enters even if the price crossed an hours ago, far from the gap zone. Only enters the moment the price crossed through the previous close. Benefit only catches the actual gap fill moment, not those late entries. This is massive. Eliminated the bad entries. Stop loss is crushed. The win rate jumped. The profit factor exploded. The drawdown is obliterated. The gap fill dominance. Why cross on detection works. Gap up. Price drifts. Enters late. Gap up. Price is at. Crosses to, and then gap fills. V2 catches the momentum of the cross, not the stell. Okay. Let me run it on 24. I don't know, Jit. I still don't know. I don't know if I'm enamored by it, you know. Come on. Come on. Come on. Thank you. All right, let's do the same here. Beautiful. Now we're running it on 2024. You're amazing. Let's see what the results are on 24. I don't know. I mean, theoretically, right? This is better. Theoretically. So I have an idea. If we're entering, okay, review and let's discuss before we test another idea we have. I also need you to, I'm going to also need you to file this away for me, por favor. Let's do the same here for 2024. Let's see what you do. V12 is absolutely crushing it. Consistent win rate for both years, 77% combined. Profit factor, yeah, that's I would say for every. I mean, the highest I seen was like 15, but that's another strategy. These under 21 for both years. Trade scalability. It's not over trading, but that's like super low, fam. All right, now let's update the gap min percentage to 0.044% and gauge results. Just follow me, bro. Follow me. Follow me. If I'm entering at the cross detection, right? Oh, you can go ahead and do what you need to do. All right. Now update with what we learned so far. You're amazing. I made it go faster, so let's see what the results are. This is triggering so it can get more signals. So my train of thought is, okay, we're entering when we detect the gap, so maybe we should do better. I don't know. Let's see. I don't know. Hmm. If that's the case, I'm down to test like 0.33. Yo, yo. I mean, staying a little measly 37 trades, you feel me? We went from 34, three more trades. Those three more trades made us another 200 buns, $200. Hmm. Let's run it on 23 real quick. Let's run it on 23. This is 23. This is 23. Let's run it on 23. Let's see what you're going to do. I'm thinking we can go a little bit more aggressive too. This is 0.44. I want to try 0.33 next. Or if you want to do Fibonacci, 0.38. Interesting. 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 Art review, and let's discuss. Have one more idea. Then I'm gonna ship this. Yeah, then I'm gonna ship it. It's about ready to go. What I'm trying to do right now is just trying to get more activity, right? I mean, yeah, we're getting better returns. I'm just trying to see if we can get more activity. So that's what the aim. That's what I'm doing right now. Review, and then let's move 2024 and 2023s into the folder created. Again, the name is in the file name. Trade 68, 1300, 553, 1300 block. Went down a little bit, but that's semantics. Oh, we came up on a little sharp ratio. Sharpity darp darp darp. Combined. All right. What? Okay. Before, what is the main trigger for getting a signal for this strat? Explain to us so we can understand it before we adjust anything else. Bow, bow, bow. We have a strategy, ladies and gentlemen. We have a gap fill strategy. Yes, I can make this. Oh, shite. You all right? All right. So gap detection 930, gap percentage 0.44 yesterday, today. Wait for the cross detection. Excuse me, gap up, still above, cross below, enter the put immediately. The put selection based on gap. Visual, okay, not triggered. What makes V3 special? Not triggered by just having a gap, time of day, volatility levels, option pricing, the exact moment price cross through the previous close. So why this works, the cross equals the proof of the mean regime is starting. Gap up scenario, the 200 price drifts, cross below. This is the signal. Gap filling, price returning to the equilibrium, enters the put for the continued fill. Get the downward gap down, price bounce, price crosses above. Gap is filling, returning, enter a call. What prevents these signals? Gap detection, gap detected but never crossed, stay on one side all day, already traded, outside window, no suitable options found. Main trigger equals the price cross through the previous day after a gap. This is a momentum confirmation that the mean reversion is happening right now, not just a prediction that it might happen. Okay, my idea is 2 trades a day. So increase that to 2 trades a day. What I also want to try is I think this is fine. I don't need to tweak that anymore. All right. Let's test 0.033 328. That's what I said, 328% first before we test the next idea. Want to do one at a time. Bum 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 bum. All right, we are going to run on. I'll run it on 24. That's fine. Oh, you gave it to me down here too. That's funny. That's funny. Let's run it on 24, homie. I'm trying to see if we can get back to 52 trades. 50 trades, bro. Let's see. Mine maybe. I think I'm going to stick to the 0.44. The idea here now is, yeah, I think I'm gonna stick to the 0.44. The idea here now is to see if we can. I know we're catching the cross early, but can we catch it even earlier? Right. That's gonna be my next idea. If we can catch that cross earlier, then that'll be a play. Yeah, I don't think this one's gonna be it. I'm not gonna hold you. Maybe, maybe not. I don't know. Maybe. Negligible. It's almost a damn near the same thing. 37 trades. All right, review and let's discuss. Let's discuss, partner. Yeah, the results are identical. That's what I'm saying. Low in the threshold, didn't find any new gaps. All 37 gaps were already greater than 0.44. No gaps is between. Okay, so 0.44 is where it's at. So 0.044 is where it is at. Now, is there a way we can detect the cross even earlier than what we are doing now? Is that possible? Boom, 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 boom. 2024 folder. Let's do the same here. Excuse me. No, I don't have tick sub minute data. I'm not gonna hold you. That's not where it's at. I only got 1 minute data, fam. We only have the 1 minute data, fam. I mean, real time is going to be a little different, but that's real time. Use the intraday bar. Instead of waiting for the bar close, detect during the bar. Only check close. Check if the bar close. Okay, hold on. So you already have the data. Each 1 minute bar has the current logic, only uses the close. We can use the high and the low to detect the cross. V5 current improved intraday cross detection. Gap down, check if the bar crossed up through the previous close. Okay. Cross happened during this bar. Assume we caught it at the cross point. Enter call. Assume we caught it at the cross. Okay. Keep enters on the same bar as cross, not the next bar. Assumes entry at the previous bar. Best case. More realistic, catches the exact cross moment. Instead of assuming we get the previous close, we use conservative. Assume we already entered slightly worse than the previous close. Realistic, enter with 1-2 tick slippage. Assume we missed the exact cross by more conservative, better for. All right. All right. Let's do 15B. I'm with it. I'm with it. Yeah, after this, we're gonna ship it. I'm not gonna hold you. I'm not gonna keep doing this. Going back and forth. This is like 50 trades. We're talking about. Like it didn't explode from like 50 to 100, but nonetheless, I'm just trying to see if we can get the detection of the cross a little bit better. If we can get that a little bit better, we have our strategy. We're ready to go, ladies and gentlemen. To actually create the bot. I'm gonna run 24 first. Let's run it on 24 first and let's see what it does. I don't know. I'm not gonna say it's negligible, but let's see. Is it better? I mean, kind of. We got some edge, ladies and gentlemen. If you stay throughout the whole video, you are able to catch a strategy with some fucking edge, bro. I'm not gonna hold you. Profit factor was destroyed. Trades went up a little bit, but profit factor was just was it high to begin with? I don't know. This is who? This is 24. Yeah, profit factor was destroyed. I mean, but it's still above. I don't know. I don't know. Hmm. Let's see. It's like this slow build though. I'm not gonna hold you. It's kind of deceiving though. Kind of deceiving that you. It'll make it seem like I don't know. I don't know. It worked on one. It kind of didn't help on the other. That's what I'm seeing. Because this one it went up a little bit, but it kind of went down too on some metrics. Review and let's discuss. Let's discuss. Since when y'all start doing that? Oh, I would not go as far as saying that. That is blasphemy. I'm not even gonna repeat it. That's blasphemy though. Why did the okay? Hmm. Um, excuse me. V15B catches the intraday ticks that don't hold. Gap up scenario. The previous, the current. VB. Okay. Low touches. Enter put. Enters price intermediate. Bounce back up. Put loses. Closes at. No cross yet. Waits for the confirmation. Avoids the trap. Okay. Added 5. Only $80 in profit. The 3 trades with stop loss. Added a whipsaw. V13 is superior. Um, shows the real flaw. Added false signals. All right. Um, I think we're ready to ship it. Yeah, I think we are ready to ship it, ladies and gentlemen. Because I mean, at this point, I mean, what else? Yeah, I think we're ready to ship it because what else can I do to be able to get more trades? All right. We are on the precipice of shipping, but want to know, is there anything we can build on from V13 in order to get the trade count greater than 100 but still maintain quality? Quality? That's my biggest thing right now. I just want to see JIT active. I mean, if we're talking about the returns, it's not bad. It ain't something that I wanted a gap fill strategy, so maybe I'm going to take it as that. Is that okay? We have the gap fill strategy and just being able to build off of it. Who's to say we can't build another one, right? We just have one that it works. So I'm kind of glad about that. I'm super geeked about that. I'm not going to hold you. Great question. Scaling V3 to 100 trades. Goal is 100 trades while maintaining the quality. Increase the trade count, the multiple trades per day. Maybe I was thinking about that. Maybe trade spy as well. Oh, I was thinking about that. It can do that. Yo, I may just hit that. I'm not gonna hold you. I may just allow you to trade spy and IB. Maybe longer. Trade both directions simultaneously. Current only gap fill direction mean reversion. If gap doesn't fill, trade continuation. If gap up, price stays elevated for 30 minutes. Gap up could add gaps that don't fill. Different strategy, momentum versus mean reversion. Um, different. No, I'm not doing that. Um, I low key am thinking about adding SPY, bro. Like, I think that's the most promising one. I'm not going to hold you. If maintain keeps. I want to add SPY because I've never done a strategy like that trades both IWM and SPY, and I think that'll be dope. So let me go grab SPY real quick. Who trades SPY? No, I need you. Let me go grab SPY real quick. Is it penny for you? I think penny for you is QQQ. Oh, it is SPY. Okay. Not going to hold you. The most enticing one is adding SPY. How would this work? We have the data. See the following backtest. This is a completely different strat for another bot we have, but we showed you to get the data from it and see how it loads. Now, with this in mind, how would it work? This will be the first multi-symbol strategy, and I'm kind of excited. I'm not going to hold you. I'm kind of excited. I'm kind of geeked. 2023 and 2024. Let's do the same here. Yo, if we can get this to work, that'll be fucking awesome. But it's going to be kind of interesting building a bot for it. So, yeah. Um, I want to combine because that is the most interesting and creative one. We haven't done that yet. And if we can get it to work, real edge. No. I want to see how we can get them both things to run, man. If we can get them both to, bruh. Hell yeah. Let's build the multi-symbol combined strategy implementation, combine IWN and SPY, multi-symbol, trade per day, what needs to be done, data loading for both, Greeks, add the multi-symbol, main loop, integrate through both signals, detect gapped, cross, position, can hold one SPY and one. Oh, that's interesting. Oh, that's interesting. I think it needs to be one or the other. I don't think it could be simultaneous. I think it needs to be one or the other. Like whoever hits, that's the one you get. That's going to be interesting. Let's see how that works. Not all eggs in one basket. Some SPY gaps. Example of a winning day. A gap up, crossed, win, gap. Okay, from both signals. All right, let's run it. This is going to be interesting. Again, I've never done it where I'm doing two signals to be able to do this gap or this particular strategy, and I think this is going to hit. I'm not going to hold y'all. And if we create this and this actually takes precedent, but I'm going to start creating most of our strategies that way, where we can have. I'm going to try QQQ and IWM, maybe an IWM and another QQQ, right? That would be dope. I'm not going to hold you. I'm not going to hold you. This will be interesting. The only thing I'm having a bit of trepidation on is being able to hold a IWM position and a SPY position, right? I think it needs to be one or the other, not jostling for positions. And I don't think it is, right? But I still think it needs to be one or the other. I don't think it needs to be one, but nonetheless, let's see. Let's see how this pans out. I mean, this could be twice as good or twice as bad. It's going to be on one side of the spectrum. Whoa. And the crazy thing is, this is about to compact. Now let me completely rewrite the backtest function for the multi-symbol. The biggest change, first, this is getting complex. Let me create a new multi-function backtest. I'll write it to a new file first, then integrate it. Run the backtest through both signals. Due to complexity, the length of modification, let me create a v16 file from scratch. Continue modifying the existing file. More edits. Run backtest. 200 plus lines. Create from scratch with multi-symbol logic built properly. All right. Let's do B. Call it two of them things. bt.py. Two of them things. And it's about to compact. So while this is compacting, I love it. Let's create two of them things from, excuse me. While this is compacting, I'll be right back. Damn, why y'all tell me I was trying to run a back test? Why y'all tell me I was trying to run a back test? You know it's not allowed to do that. You can't do that. Do that. You're not going to find gamma. Let me just open up a new terminal. This is a new thing. Okay, but I don't see. You mean to tell me no position open? Hold on. Let me just give you more of a sample size. Let me give you 2 months. So you can't say shit. Review within the first 60 days. No signals? Is everything good? That's the interesting part. Looking at the output, everything is working fine. Gaps are being detected, but no trades are executing because we're waiting for the cross confirmation. Wait, no. We are thought we are doing the cross detection. We detect it is crossing, like shown here. Is that what is going on? Found it, V3. Found it, V3 uses the intraday high and lows for cross detection, but I mistakenly implemented V12, the bar close. Wait, this is actually 13, the intraday. Let me check. Okay, the current uses which started from V3 logic, but let me fix. Okay, to be able to include it. Beautiful. That's what I'm saying. Fixed. I'm going to run it. I know you're pressed to. Let me hold that. Let me hold that. Let me hold that. Still nothing. This is interesting. I'm just going to let it run. Because you can't tell me we're going to go through the full year, JIT. And we can't get it to confirm. Something's wrong here. So I'm just going to let it run the full year. Let me let it run the full year so I can talk my shit. So I'm not going to hold you. I think there is an issue with the detection logic. I'm not going to hold you. See, because damn near. All right, this is getting boring. All right. While we are waiting for this back test to slide, y'all want to go read something? All right. All right, waiting for the back test. Let's continue reading this little bit on 4.5, even though I wanted to try it, but it still didn't work, whatever. As models get smarter, they can okay, we talked about that already. It's in August. When it's done, I'll move back over. Products like Cloud Code, what's possible with these new kinds of upgrades. We've made the Cloud Code developer platform come together. Cloud Code gains 2 upgrades with OPS 4.5. The plan mode now builds more precise plans and executes more thoroughly. Claude asks clarifying questions up front, then builds a user editable plan. Oh, just like little cursor bullshit. Cloud Code is now available on the desktop, letting you run multiple local sessions in parallel, perhaps one for an agent to fix bugs and another one to research GitHub and a third to update the document. That's cool. Cloud Code desktop. Maybe I'll go get that. I didn't know they had a desktop version for Cloud Code. Maybe that'll be something I can go get. It's almost done. All right, it's done. I can try that out. That'll be cool. Something has got to be wrong. No trades? Let's find the issue and fix it properly. Let me debug this step by step. Let me debug this. First bar, previous bar, close. The high never touches 230 on January 2. Let me check if it crosses later or check the Greek data availability. January 2 does cross at 952. Let me check if we have the Greek. We do. The Greek data is right the fuck, bruh. Found the issue. 0 DTE calls at 952. Let me check what DTE values are available, exist. There was 0 DTE calls at 952. That'll make sense. There's a problem loading the data. There is 0 DTE calls, bro. That's what I'm about to say. Almost 7,000, bitch. There's the problem. All options on January 2 are 0. Okay. Expiration before the trading date. Let me check. Perfect. The timestamp, the DTE's calculation is my wrong. Let me fix it. Okay, the expiration and the timestamp, the DTE calculation is in my loading data is wrong. Let me fix it. As you thought, we are going to run it, Jit. You try to tell me that I was wrong. Bro, it's still. I gave you January. Something is still wrong. We stopped it. Notice nothing. Doesn't seem right. Let's find the issue and fix it. I'm not going to hold you. We do have something that is special, and I think that's why I'm taking the time to be able to really make sure the script is running very slow because of repeated filtering. Let me. No, Jit. That is. The script is running very slow because of repeated filtering. Let me optimize it. The issue is that it's filtering 15 million Greek rows on every bar. Major slowdown. No, that isn't the problem. Maybe is, but not the overarching issue. We have no signals triggering. Has to be something wrong with either the data loading, function calculation, or methods. Let's find out where the problem is and fix it. Sometimes you got to put your foot down. No, I know what I'm talking about. I know what the hell the problem is. I think so. Bloviating. That's what the hell you're doing. You are bloviating. What does bloviating mean?
Bloviate.
To talk at length, especially in an inflated or empty way. You sure you want to use that? Bloviating? Smooshing? Found it. 0 DTE says 0, but when I filter equals, I found 0 rows. The 0 DTE calculation is creating a series of mismatch indices. Let me check. I know I'm super fly. I know I'm super fly. Only on wait, method 2 shows negative. The issue is the expiration has 0 DT, but the quote is 930 for we need to compare the dates only. Perfect. Now, this doesn't make sense, bro. Listen, are you sure? Okay, this is 24 though. Now I need to check the fucking calendar because this shit right here. 24, 24, 24. You said January 2nd. January 2nd was a Friday, so that's February. January 2nd was a Monday. So that doesn't make sense. Are you sure? This doesn't make sense. Why on a Tuesday no 0 DTE options are available? Check the data again. Let me check the actual expiration dates in the data. Yes, you fucker. Sometimes you gotta fight with the AI, and it's supposed to be smarter, right? That's why I kind of wanted to use the 4.5, but you bullshit. 0 TT available is available. All options expire the same day. The calculation is a problem. Let me verify fix. Now, I don't know if I can trust you with that. But for 30 seconds, okay. You can have a little 30 seconds because it's going to stop after 30 seconds. And it wants to see what the script is like. All right, go ahead and run. I'll let you run for 30 seconds. But then, y'all gonna get ready here. Because we know what we doing. And after a bit, it should be stopping. Should be stopping. Y'all gonna get ready. That's not 30 seconds. That's a long ass 30 seconds. Oh, now you gotta run it from the correct, bruh. Now it's a minute. You don't understand. This is bad for airtime right now. I'm just sitting here, just waiting for you to be able to do something. A minute now. 30 plus 30 is what? A minute, right? 60 seconds. So 60 seconds is a minute. I'm trying to just find things. But listen, we did, this is again, this is a little bit complex because we're loading two assets, right? IWM, which is a Russell 2000, 2000 small cap companies from the New York Stock Exchange and the NASDAQ, and SPY is the S&P 500, the top 500. Okay, stop talking. What the fuck, bro? 90 seconds? All right. It's the top 500 companies within the New York Stock Exchange. And what we're doing right now is I want to be able to make sure that the data loading is actually correct and working, because I think there is an issue with regards to like how it's loading. And when it says CD, let me CD it first. Let me get in the folder first, right? So it got in the folder, which I thought you were already in the folder. So it got in the folder, and now it's running the back test for 30 seconds to make sure that the data loads, right? And it wants to see the first 30. Oh, get the fuck. All right, I didn't give you motherfucking enough fucking rope, bro. Yo, what are we missing here? Let me see. Okay, let me see something. Are y'all gonna let me try this 4.5 shit out now? Right? Are y'all gonna let me try? Cause y'all saying it's smarter than 4.5 Sonnet. Let me try. Let me refresh the page. Maybe it's just something on the page. All right. Now remember, in order to get this 4.5, I need to say Claude hyphen model. Boom. Okay. Which model are you advised via TLDR? I'm Opius. Oh, okay. Now we have it. Now it's working. That's weird. Why didn't it work before? What I'm going to do is just save this so I can have it. Beautiful. All right. Perfect. Now we need a bit of assistance. Review the following backtest we are running. Where is it? Here it is. Make sure you understand the strategy. For more context, use grep and awk terminal commands to review journal. We noticed that there is an issue maybe regarding the data loading, detecting the 0DTE options, or even the signal detection. Now, I say this with caution. Here is a previous version of the backtest. Just use this to find the SPY data. That is it and how it loads. Then advise what is the issue with two of them things and why isn't it detecting the signals. Review from recent output. And also, I think this will help too. I'm not going to hold you. Being able to give it the previous session chat logs. So it's like, all right, bet this is everything we talked about before. Okay, it has to be faster. Come on, come on, come on. And here is the conversation from previous session. Now, let's find the issue and properly fix it. Shit, that just took up a lot. Identifying the issue. Found the problem comparing the two files. The problem is that two of them find the options is filtering by the option price using call or CMP, but in the right data is call and put. Goodness gracious, bro. Just as simple as that. Just as simple as that. Just as fucking simple as that, bro. That's crazy. If that what it was, bro, I'm cussing out. It can't be that simple. It can't be that simple, whoa. It can't be that simple. It was that fucking simple. That's crazy. I'm dumbfounded. I'm dumbfounded right now. What is that? See caveat documentation, pandas, version calculated. Okay. I'm dumbfounded, y'all. It was that fucking simp. That's crazy. I just wish this. Wait, how can you be negative? Wait, you telling me we went from $1,000 to? This doesn't make sense. See, I just don't know what the fuck and how the fuck. I can't really tell what's going on right now. I'm not gonna hold you. Spy entered close. So I mean here. Oh, is that 32,000? Is that 32,000? That is 33. Holy shit. That's 84 grand. Hold on. Do my eyes deceive me? Do y'all see that? Am I tripping? That's 107,000, right? That's crazy, fam. That's crazy, fam. I think I'm gonna let Opus 4.5 stick around for a little bit. I'm gonna let him stick around for a little bit. Okay. I'm kind of dumbfounded right now. I'm not gonna hold you. To go from $100 to almost 150K is fucking mad. Mad. We may have found something, ladies and gentlemen. We may have found something. So we started at $100. We finished at $174,165.28. Total return. Max drawdown was 99%. That's what I'm saying. There was at one point in time. We need to look at that. Per symbol, 63. That's 58 grand. How are you catching more? Number one, there's just a couple things that's not going on that I don't. All right, hold on. Review results and let's discuss and make sure there are no issues in the numbers. Now, we noticed a few items didn't get done. First, we don't have the CSV file, and review how the feedback is done here. We need to implement the same for this backtest. But first, review and let's discuss these results. That's crazy that fucking Sonnet was just spinning his ear, trying to figure it out. And Opus came in and like, bruh, it was just a little call and put. Red flags, 174,000 returns from $100. This is unrealistic. 100 to 174,000 in 1 year with 127 trades. The max drawdown nearly wiped out. So at one point in time, ended up massive. This suggested position sizing. The average win rate versus the starting capital. How are you winning 2K per trade starting at $100? Because I know what the hell I'm doing. Function uses 80% when less than 499. As the balance grows exponentially, the position size explodes after a few wins. You're betting huge amounts. Here's why. When 2100 later trades with huge balances, you hit negative 99% drawdown. One big loss nearly wiped you out. Comparison, detailed metrics, exit reason, verbose logging. Not fully implemented. I don't need that. Okay. Do you want me to fix the always risk expert trade or keep compounding? Should we add the full metrics plus the CSV? Yes. Do you want the max position size cap to present? No, these exponential blowups. Okay. First, let's do this. First, let's do the following so we can look at the trades and see what is being done before we update any of the parms. Oh, incredible. Oh, Amen. That's crazy. I'm not going to hold you. That is fucking mad. Mad. Adding the CSV export of the trade so we can actually look at the trades and the metrics. Oh, you know what? Also make sure that there is the affordability check that Penny for Your Thoughts backtest has. So we can ensure we are not buying options we can't afford if not done already. I love it that you did that. Unforgettable. Lust founded has no affordability check. It just calculates the contracts and enters without checking if we can actually afford it. Let me add this check. Thank you. That's one more. Can enter. Okay, perfect. Beautiful, beautiful. Now let's run the back test again. Let's run the back test again. On 2024, we're testing it on SPY and IWM. I just brought in SPY, so oh shit. No, I really can't see what the fuck is going on. So it's at 1300. So by the end of January, we're at 1300. So the balance is right here. So I'm just going to try to keep up with the 1900, 2000. We just crossed 2000. So it's averaging about 1,000 a month. Then it just explodes from there. Yeah. This is accurate. I'm not going to hold you. I just found something that's crazy because when we first started with this, and I'm very interested to be able to take this live tomorrow and see how well it performs. I'm interested to see what the metrics are at the end of this, right? Because if we're north of, it's at 12,000, we're in June right now, 23,000. So I see where the growth is coming from now that I can see the actual account balance and shit like that. So this is real. This is not fictitious, ladies and gentlemen. We've actually created a strategy that not only compounds exponentially, right, but it's trading two signals. And I think that's something that's unique within itself because, number one, this is my first time actually creating a strategy that way that trades two signals. I want to start doing it more and more because I'm seeing the edge that it can potentially have, right? Because what most people are doing, oh, I just want to trade SPY, I just want to trade QQQ. But shit, you got a strategy that does both of them things and does it well, as we're looking at right now. This is incredible. We're at 128,000, 125,000. This is crazy. The strategy was averaging 1,000, then it just jumped up. At the end of January, we're at $1,300. At the end of March, we're at 3,000. Then by June, we're at 23,000. Before Q4, talking about end of Q3, 80,000. And now it's about to finish north of. Okay, now we got the trades. Now we can actually. Profit factor 6.33, almost 1.5 minute. But bruh, you didn't even give me all the fucking metrics, bro. You just gave me a little Walmart version metrics, man. Give me my metrics, man. All right, review using grep and awk terminal commands. Then let's discuss. I got to keep out because remember I'm using this new Opius thing. All right, it doesn't look like it's eating that much of I don't know, it's not eating that much. So I'm gonna let it keep riding. Yeah, bro. We kind of fell forward. I'm not gonna hold you. We kind of fell forward, and I almost threw the strategy away. We kind of fell forward, ladies and gentlemen. Trade 5 is the explosive point. Went from 199 to 788. Added $589. A single gap fill trade with 5 contracts. That's 393 return just on one trade. IWM put on January 12th. 71 of 127 trades, 56% are at 100 contracts. That's the max cap. Once the balance hit 23,000, trade 50. Every trade is maxed out at 100. Excuse me. Starting balance by trade 5, we're at 788. By trade 8, we're at 1,600. By trade 50, we're at 23,000. By the end, we're at 174,000. The problem is, fuck that. I am not dropping that. Even risking 22% with 100K, still 22,000 per trade. 100 contact, okay. Suspicious trades, trade 5, entry 30, exit 149 in 1 minute. That's a gap fill, bro. That's a gap fill if I've never even seen one. Trade 8, 13 contracts. We entered at 28. We exited at 78, 171 in 1 minute. Are these realistic option moves? For 0 DTE can go from 0 to 149 in 1 minute during a gap fill. It's possible, but aggressive. Should we? No, fuck no. Want me to look at those specific running trades to verify that the option pricing is correct before I'm going to run it on 2023. Let's go look at 2023. Oh shit. You know what I should just do? You know what I should do? Just boom. What I'm going to do, I'm just going to highlight you. And then I'm going to come here. I'm going to open up a new one. Because this is going to be interesting. I think we may have fell forward on this one, y'all. We most likely, indubitably, have fell forward with this one. I'm not going to hold you. 2023. Beautiful. Now we're running it on 2023. Let's gauge how well this 2-symbol gap fill strategy works out. All right. I'm just keeping an eye on this. Let's keep an eye on this. At the end of January, we're at 187. All right, come on. 393, 395, excuse me. So it's oscillating between like 150 and 390, which is crazy. Oh shit, I'm tripping. It's 3,000. 2,000. Oh, I'm tripping. I'm tripping, y'all. I'm tripping. At the end of January, my fault. I gave you the wrong number. At the end of January, it's $800. Where are we at right now? It's at 17K. And what month is it? It's June. It's at 17K. 21K. It's June. I am not going to hold you. I am not touching shit else. I found a strategy that works. It just mind blowing. I'm not going to hold you. This jaw in the brain, yeah. It's at 70,000. Just slight 70,000, and it's September. We're running it on 2023 now. This is crazy, fam. 87. Can it cross 100 too? We have a strategy that is averaging 100,000, starting from $100. Is this real? Shit, me. I don't know. I mean, it is a back test, so like that, the validity of the data is there. It's just a matter of like how well are you able to create a strategy that works in your benefit. And again, this is the first time I've created a strategy that is working with 2 symbols, so I think that is adding a little bit of it, right? 100 trade. What's the win rate? 69%. Average trade 1,400. Average loss 700. Profit factor $4 for every $1 that we're losing. Spies coming in crazy with them. We may have got something, ladies and gentlemen. We may have found something, ladies and gentlemen. All right. Review 2023. Then properly review 2023 and 2024 and make sure the numbers are correct. What we are looking at is real. We found something that is crazy good. Kind of fell forward. I'm not going to hold you. Then after this, I'm just going to go create the bot. This bot is going to be ran on Alpaca. I gave y'all my thoughts on IBKR. I am not, like, slowly but surely, I'm migrating everybody over from IBKR. I was gonna try Tasty Trades, but Tasty Trades doesn't allow paper trading. Question mark. Eyebrow raise. What the hell? So it's either going to be IBKR or just IBKR. I'm not going to hold you. Excuse me, Alpaca, not IBKR, because IBKR could shove it. I'm not even going to hold you. They just been bullshit with me, man, and I expected a lot from them. But ladies and gentlemen, we may have found something that is stupendous, phenomenal, outstanding. In another 30 minutes or so, I'm going to be done with this strategy. Found a problem looking at the option data at 10:42. The 195 put had a bid of 129, ask of 132, delta of 73.87. But the trade shows the entry of 24.87. The backtest is finding options with delta of negative 24 at entry, but the actual 195 put at the same time had a delta of negative 74. The issue is that the option data doesn't match what the backtest thinks is trading. Let me dig deeper. Oh, fuck. Fuck. Razzle dazzling. 193 put price throughout the day. That must have been IWM. Found the bug. The backtest recorded strike. Okay, but the actual price. Okay, the backtest is mixing up the option data. It's recording. Hold on. Okay, all the contracts up the current time, not just at the current time. So we might be selecting an option from the earlier time with different prices. Then sorted by the mid price descending and ask which one could be different. Okay. Just that one little change, huh? That one little change. Let's see. What I want to do is I know they are. I mean, it's in the trash, but if I need it, I could go get it back. So what I'm gonna do is just move that over there. Let's see. Let's see. $89. 77. Uh-huh. Not as explosive, I see. Not as explosive, I see. I mean, yes, it's gonna climb, but that explosive climb isn't there as it was. It's at $237. 276. Uh-huh. This is, I'm talking about completely different. Can we double check that what you think is the issue is actually the problem and make sure that it is properly fixed? Yeah, this is fucking night and day. Users wants me to verify the bug I identified before running the backtest again. Let me write a diagnostic script to confirm the issue and verify the fix. This is night and day, fam. I found 115 options across 72 different timestamps selected from 9:51, 51 minutes earlier. Okay, fix the code. Yeah. This is completely different. Oh, like super different. The change from equals but confirm went from 30 to 151. The real 400 move was within the fifth as IWM dropped. The bug was buying at 951.30, but entering the trade at 1042 when the option was actually. Okay, wait. What you're saying doesn't make sense though. Hold on. 195 put went from $30 right to 151 at 1043. A real $400 move over 50 minutes as IWM dropped. The bug was buying at 951 prices, but entering the trade at 942 when the option was actually worth 132. That's impossible time traveling arbitrage. I can see from the updated CSV that the fix already applied. Let me verify the results. Um, but is the signal being generated at 951 or the 1042? Meaning, is the strategy finding the gap, right? Then detecting the moment the crossover is the crossover is about to start and then enters the trade. What is happening behind the curtains here? We want to make sure we are heading in the same direction. Fixing this and not causing an issue or misplaced logic. Mm-hmm. Unforgettable, like Gucci bankroll. Gap detected at market open. The signal is correctly generated at 1042. The gap detected at market open. 195 versus the previous close. The strategy waits for the cross back to 193 gap fill at 1042. The low touches cross detected put signal. The bug was not in the signal generation. The bug was in the find the contracts. The signal correctly fires at 1042. It finds option contracts. It should find a put contract at 1042, but the buggy code search time was less than 1042, all historical data. It found a put at 195 from 195 at 951 that had a delta of negative 25 and ax of 30. The option at 1052 was actually worth 1032, deep in the money by then. The fix we need to find, the fix is correct. We need to find an option that's at the same signal time, not historical timestamps. Get option from all past data. Get options only at current data. The signal generation is fine. The fix ensures we buy options at the current price when the signal fires, not the historical price. Okay. Now, regarding the detecting if the cross is about to happen, are we detecting it as early as possible, or is there room for improvement there? Now, the strategy came crashing down. Review. Using grep and awk, and let's begin the discussion again to improve upon. All right. Yep. Mm-hmm. It truly did, fam. It truly did. All right. While we wait for this output. Well, this is interesting. I mean, I'm glad that it found a bug, but I'm like, damn, bitch, it couldn't be a bug that could have helped us. I mean, I appreciate it, but damn. No, I want both. I can see from the realistic results, the 88 trades, the final balance versus 174, win rate down, average trade, losing, gap fill, time stop. IWM is unprofitable. SPY is profitable. The win rate dropped to 53, much more realistic. Many small winners, some big losers. Trade 1 lost $20 instantly on a stop loss. Trade 19 and 20 on April 3rd hit 100% ROI gap fill. These look like legitimate gap fill wins. Should we drop IWM and focus on SPY only? No. The cross detection is working, but maybe entering too late for a cross that started earlier. The time stop 36. Okay. No, we want this to work on both. Now let's look into and find out why we aren't detecting it earlier or once it happens, so we can ensure we enter and catch it before, not after. Elucidating? Elucidating. Let's go. Remember, we saw bloviating. Talk at length, especially in an inflated empty way. You ain't talking about shit. So, elucidating.
Elucidate.
To make something clear and explain. Elucidate. Sock hopping. This guy. This guy. The key is at 9:35. The price was already hitting 0.3 gap fill target, but we didn't enter until 10:42, 7 minutes earlier. Cross already happened. Let me check if the options were available at 10:35 and what the price difference would be. Okay, that's kind of overfitting right there. Interesting. The specific case at 1042 was actually better, but let me check more examples and also look at the core issue. We need to understand the trade-off. Now I see the real issue looking at the trade. The first approach crossed that 18-minute delay. First approach crossed that, but entered at 42 minutes late. So what the fuck is the delay? First approach at 9:34 crosses at 52, 18-minute delay. Second approach 9:34 crosses at 9:35 but entered at 10:47 minutes late. Crosses at 9:30, enters at 10. Oh my goodness, bro. Why are we entering so damn late? Okay, now I see the problem. The cross happened at 9:35 and 9:37, but we entered at 10:22. Why? The issue is that after the first cross, the price went below the target. Okay, hold on. I love when you move it when I'm reading. Went below the target and stay there. The cross detection requires that the price is greater than the previous and the current is less than the previous. After 937, the price dropped between 998.63 and 998.5, well below the target. So the previous was below the previous price was below the previous close, which means that the cross condition wasn't met again until 1022 when the price recovered back above the price. The current logic only fires when crossing from above to below or vice versa. If the price gaps, crosses, and then keeps going, we miss the entry. How we can get a better entry? I really feel like you got okay. Now I understand the current logic. The issue is that line 445 and 452 will be 45. Let me show you the fix. The problem is this requires the previous price to be on the right side of the target. If the price blows through and keeps going, the previous price will be on the wrong side and subsequent the cross won't trigger. Proposed fix, the first touch logic. Track if we already seen the cross today per symbol. If not, get gap info, highest touch target, lowest touch target. This will catch the first time the price touches the gap fill level, regardless of what the previous price did. All right. All right. Proceed to implement. Then explain afterwards why this is better objectively, of course, and cite your sources as best as possible. It's about the compact, y'all. So let's see. Maybe I'm going to use OPS maybe like 1 max 2 times per day. And then every other time I'm going to use Sonnet. I think that's what I may do. See, I told you it's going to compact. All right. All right. What I'm going to do is I need to put you. I told you it was going to compact. And that's what it did, homie. We're on the precipice. It's like, this is like a roller coaster, bro. You going up, you going down. You going up, you going down. But we still sliding. This is definitely a roller coaster, fam. All right, there we go. Let's implement the first touch cross logic. And guess what you're not going to do? You got a little bit too ambitious and ambitious there. Yeah, this is the one that completely flopped. All right, so let's see what it's screaming. This is like version 18. Okay. Okay. That $88. All right, 80. Just based off what I'm seeing, I don't know. This is interesting. I don't know. This is crazy. I don't know, bro. This is wild. This is a fucking mind fuck, bro. I seen the strategy have 1,000. So minimum, we should be there. It's like, why I'm not catching it? Yeah, I still think there's something wrong. This doesn't make sense. All right. We still believe there could be an issue in the backtest. Review. Should I just recreate this backtest at this point, bro? and let's discuss. Should I just recreate this back test? Or, I mean, it's getting to like 5 hours. I'm not going to hold you. Should I just like hold this off and come back tomorrow with y'all? Um, like I'm kind of determined right now to get this done. The problem is IWM time stops is 3 times worse than spies. IWM gap fills are less reliable than spies. When they don't fill, the losers are larger. Let me check the gap. IWM is a problem. The larger gaps, but they still fail to fill. IWM is the biggest loser. Tighter possible solution. No. Lower the IWM max gap to tighten. Shorter. IWM's excellent. No. Fucking A, man. Using grep and awk terminal commands. Review. When we just had IWM, we had V13 parms that were great, and this was based off of what are we doing different here. Ba-dum. This is wow. This is crazy. All right, and another parameters match. Match V12 setting. Let me check the gap. Both have the both have the min gap, no max gap. The parameters are identical. Let me check the original backtest trade count to see how many trades we were getting. Found the issue. The take profit levels has no take profit levels, only gap fill, time stop. It's okay. Gap fill. This is what's missing. The take profit levels were correctly all right. Yes. Proceed to do so. It's the little shit, bro. It's the little shit. Now I understand the structure. Let me read the current two of them and add the TP levels. Now I need to add the TP levels as a top as a constant. Add TP price check in the init and then add the exit. Okay. There's your constant. Here's in the config. Okay. Here's in the init. You thought. You really thought. That's who's gonna be my motivator. Ah. All right. Let's see. Fuck. There we go. $70. This is wild. They just gave back almost $100. Yeah, I don't know. I got to take this under advisement because I thought this was gonna slap, but it is doing some jiggity jiggity. So what I'm going to do is I'm not going to keep y'all here much longer. I am going to drop part 2 of this video. What I'm going to do is just wait till the end, and then I'm just going to call it. I'm not going to hold you, because this is going on almost 5 hours here, and I thought we were Gucci, right? I thought we were at the precipice. It was like, all right, about time, but no. I mean, this is some things you got to learn. I ain't gonna hold you. This is part of the process, and I enjoy it. I appreciate it. I just really don't understand the difference here. I think there's a bigger issue at play here. I'm not going to hold you. So I'm going to explain it as soon as we get to the part 2. So I need you to like and subscribe to the video, and then we're going to be at part 2 so we can finish up our work here. It is your boy Kreative. We'll be back at it again with another episode. Let me just show y'all this real quick. I mean, yeah, that's marginal, bro, but again, just a couple of things I think we need to fix. But again, I will show y'all that IWM tomorrow. It is your boy Kreative, and don't worry, I'm going to stream here. Not Twitch, because I thought I was just going to Twitch, but I still need to show y'all love. But nonetheless, man, it's your boy Kreative. We'll be back at it again tomorrow for part 2 of the video. So make sure you like and subscribe, and give me your comments. Let me know what you think. I mean, you saw a lot.